Hey everybody, Rob Booker here, and I want to do an anatomy of a trade that worked out nicely. Now, I've got some losers, I've got some winners in my account right now, but these times of volatility are times when I do especially well. So we'll go a couple of months with some average, middling performance, and then we'll have blowouts. Just big time, positive, big wins. Always small losses, big wins. And that's kind of the way I operate. So there's some consistent performance with the robots, but in the stock trading that I do, it's a lot of just sort of sideways movement and then big time volatility and big time gains. And I always cap my losses at about $1,000 in this particular account. So with that said, I bought on January 6th some Wells Fargo puts. I bought 5 contracts on the $52 put for $870, and I bought the $50 contract, 25 of those for $350. So then just recently, I sold the 25 contracts for $1,825 and the $52 puts, the 5 contracts, for $2,300. So that gain was a couple of $1,000s at least. So I moved my account up about 10%. And so what I wanted to do was spend a minute, not to brag, I want to teach you how to do this. I want you to have these kinds of gains. I think these are absolutely 100% possible for you to have. So what I want to do here is, so let's say we did 30 contracts total, sold all of those for, what was it, like 2,300 and 1,800, so 3,000 plus, so $4,100 in closed out gains, and I spent about 1,100 to execute those trades in the first place. So that's really about a $3,000 gain, give or take. Let's just like not get crazy about the numbers. So I want to teach you about this trade and do an anatomy of this trade. But if you are even remotely interested in taking these kinds of trades together, I want you to click the link below this video right now. So once again, we got into a trade, we spent about $1,000 to get in, and then we got out a week and a half later or so with about a $3,000 gain. And if you want information on that, click the link below, or if you're watching on Instagram, you can swipe up and get that link. Okay, so let's do an anatomy of this right here. So we'll click here and we'll do a full screen snip here, and then what we'll do is we'll copy it, and then what I want to do is come over here to the whiteboard and I want to see if I can paste this. Now if this works, it's going to be an amazing accomplishment. Oh my gosh, it worked. All right, let's do an anatomy of this trade. Whoa, look at that go. All right, this is what I refer to as the perfect trade setup. So here's what I refer to as the perfect trade setup. What we had here was bearish divergence sitting on the chart right up here at the top. So this is what I call bearish Knoxville divergence. And there is, on YouTube somewhere, there are videos about Knoxville divergence and links to Knoxville divergence somewhere on my YouTube channel. And I strongly recommend that you take a look at those videos because you can grab that indicator and you can put it on your charts. If you use TradingView, you can just search for the scripts in TradingView and you can get Knoxville divergence for free. Some guy named LIJ_MC built a version of it, which works perfectly fine. Okay, so we had this Knoxville divergence right up here. And what was happening at the time was the relative strength index was rolling over. And it was overbought and overbought and overbought. And a lot of people don't do this, but I drew a trend line here on the relative strength index, and it broke down below that trend line. And when it broke down below that trend line, what we saw here was a crack in the structure. Now, at the time, Wells Fargo is making money. Wells Fargo is a major bank. They were about to report earnings, and a lot of people don't like to trade in advance of earnings. But it's one of my favorite times to trade. And the reason for that is, right after earnings, when volatility goes through the roof, volatility is going to affect the price of the options. And if I own some options, they're going to appreciate. They're going to rise in value just because of volatility alone. And that's exactly what happened. So I saw the crack in the trend line on price, the trend line on the RSI, and I knew at that point that leading into earnings, this was the clue. This is a clue about what the market wants to do. This is testing the waters. It's faking some people out. It jumps back up, and here's what's going on behind the scenes. Institutions, big money, smart money knows it wants to be short Wells Fargo. It breaks here, some people sell it short, and then it rises up again and people get cautious, people get scared, people get worried, and what they start to do is they start to exit those sell positions if they had them. Banks and institutions pick them up. If you watch the COT report, you know that institutions and banks are loading up when speculators are giving up. And what happens here is we get multiple drops below overbought on the RSI. And right in this zone, so if I erase all this, I'm going to tell you right where I wanted to make all these decisions. So I knew right here that I wanted to be short. And right in this area, right before earnings, so it's January 6th when I took this trade, right here, I bought puts. I don't want to sell stock short. I just want to buy puts. And I risked about $1,000 to make, and I only had a target of $1,000 in the trade. But after earnings, I held on, and then one day it just gapped open, and somebody wrote me in the program, in the coaching program, and they said, hey, Booker, our Wells Fargo trade is way up. And it was awesome, and it felt great, and of course, right away, I closed the trade. I don't need to ride that winner. I don't need to move my stop to break even. I don't need to scale out of the trade. I don't need to take half off and try for more. Taking half off is for Walmart, right? Half off on everything. I don't even worry about any of that. I'm not scaling out. I grabbed the money, and I used the Steve Miller Band method of money management, which is to go on and take the money and run. So, thanks for being here. Thanks for watching this short video. If you want to take some trades like this together with me, follow that link below. And I'll see you in the next one.